I want you to imagine a specific number. Think about the heaviest weight you've ever had to carry, or a suitcase you dragged through an airport. Now, the debt, the regret of not starting sooner. For years, I carried that weight. I could keep struggling under the burden and start packing it again, this time with intention. And if you are watching this feeling like you are standing at the starting line, full of doubt, it's the cleanest slate you will ever have. Life, using the one thing that matters, the rational investor mindset. Before we get to the end how, let's address the elephant in the room. You're at zero mentally. That the stock market is a casino for the rich, or that tech stock your friend won't shut up about. And you feel a specific type of despair, watching everyone else party inside. What's the point of investing when I can't afford a deposit? Oh, there was a period in my life where I had to choose. I remember looking at a stock ticker on my phone. I felt stupid for not having a degree in finance. But here is the psychological trigger I want you to grab onto. Fear is a terrible financial planner. To build wealth is a lie your brain, the truth is, a disadvantage in the rational investor. You have no bad habits to break. You have nothing to lose, and therefore, lesson 1, the more zeros. Balance sheet. Exercise. We don't start with stocks. We don't start with side hustles. Physically, I want you to imagine drawing a line down the middle of a page. Not a dollar amount yet, just a feeling. Maybe it was a backpack full of textbooks. Got that feeling? Good. Imagine that weight is actually the financial baggage you're carrying right now. The fear that you'll never catch up. And one day, I realized I had a choice, or I could put it down, empty the suitcase. I had to hit the reset button from absolutely zero, with empty pockets and a head. I'm here to tell you that zero is not a curse. Today, I'm going to show you how to restart your financial more than your bank balance. The pain points. Why starting from zero feels impossible, the pain. Most of you watching aren't just at zero financially. You've been told your whole life that you need money to make money, that you missed the boat on the housing market or Bitcoin. You look at your bank account, you look at your bills. It's the feeling of standing outside a locked door. You think, what's the point of budgeting when I have nothing to budget? I know that feeling intimately, between paying a bill and buying food. Thinking, that's a world I'm not allowed into. I felt ashamed for the debt I had accumulated. Shame is a terrible financial advisor, and feeling like you're not allowed tells you to keep you safe and stuck. Starting from zero isn't mindset. It's an unfair advantage. You have no portfolio to manage. You have the clarity to think differently. So, how do we start? We don't start with crypto. We start with a piece of paper. On the left side, we write assets. On the right side, we write liabilities. Now, if you're at zero, the left side might look scary. Maybe you have a car. Maybe you have a laptop. Maybe you just have the clothes on your back. That's fine. But the right side is where we do the surgery. We write down every single liability. That credit card debt, that student loan, that money you owe a friend. Here is the rational shift. Most people look at this list and see a life sentence. I look at this list and see a target list. Your net worth isn't just what you own. It's what you own minus what you owe. But your life is not defined by your net worth. Your potential is defined by your ability to move numbers from the right column to the left column. I want you to understand something critical about the psychology of debt. Debt feels like a giant monster because it's abstract. You owe $5,000, $10,000, $20,000, but a rational investor breaks that monster down into tiny bite-sized pieces. We aren't going to pay off $10,000 today. We are going to pay off $10 today, then another $10. The rational investor mindset doesn't look at the mountain. It looks at the next step. If you are restarting from zero, your first investment isn't in the S&P 500. Your first investment is in your own freedom. Every dollar you use to pay down high-interest debt is a guaranteed return. If your credit card charges 22% interest and you pay an extra $100 toward it, you have just made a risk-free, tax-free 22% return on your money. Name me a stock that guarantees that. You can't. So, lesson 1 is this. Before you even think about building wealth, you must stop the bleeding. Rationality demands that you secure the highest return. And in the beginning, that return is found in destroying your liabilities. Lesson 2, the income versus ego equation. Okay, so you've made the list. You've accepted that you need to attack the debt. But here's the problem. You can't attack debt if you don't have a weapon. You need cash flow. And this is where most people's ego destroys their future. When I was rebuilding, I had a job. It was a fine job, but it didn't pay enough to both live and save. My ego told me, you deserve better. You are overqualified for this. Don't work nights, you're tired. My ego was trying to protect my status, but it was actually destroying my potential. To restart from zero, you have to enter what I call scavenger mode. This is temporary. This is not your life forever. But for the next 6 months or a year, your job is to maximize the delta between your income and your expenses by any legal means necessary. I worked weekends. I drove for ride-share services. I sold things I didn't need on the internet. Did I look cool doing it? Absolutely not. Did I feel stupid picking up a shift at a restaurant? When I used to wear a suit to the office, you bet I did. But here is the secret the rational investor knows. Cash is ammunition. And in scavenger mode, you are gathering ammunition. When you're broke, you can't afford to be picky. You can't afford to have an ego about your work. The world doesn't care if you feel you're too smart to flip burgers. The market rewards value. So, go create value. Work the extra hour. Take the annoying gig. Every extra $100 you earn is a brick, and you are going to use those bricks to build your foundation. Lesson 3, the emergency buffer, your psychological armor. Now, you're earning a little extra. You're paying down the debt, but you're still at zero in terms of safety. This brings us to the most important psychological tool in the rational investor's kit, the emergency fund, not as a financial tool, but as a psychological shield. Let me explain. When you have $0 in the bank, you operate from a place of fear. Fear makes you make bad decisions. Fear makes you hold a losing stock because you need the money. Fear makes you sell a winning stock because you're scared of a crash. Fear makes you stay in a job you hate because you can't afford. 2 weeks between paychecks. A rational investor cannot operate from fear. So, before you invest a single dollar in anything risky, you must eliminate the fear of survival. Your first goal, after stabilizing your debt payments, is to save $1,000. Just $1,000. It sounds small, but I promise you, the day you hit that $1,000 mark, something shifts in your brain. You realize you could have a flat tire and not have a panic attack. You realize you could quit your job and have a 3-week runway. This money isn't just cash. It's a sedative for your anxiety. It's the thing that lets you sleep at night. And a well-rested, calm mind is the only mind that can make rational investment decisions. Once you have that armor, once you have that buffer, you are no longer playing defense. You are ready to play offense. Lesson 4. Defining rich. The freedom number. Okay, we've done the dirty work. We've cleared the debt. We've got a little safety net. Now we can talk about investing. But I want to stop here for a second and ask you a question that no one in the finance world ever asks. Why do you want money? Seriously, why? Is it to buy a Lamborghini? Is it to impress people on Instagram? Is it to make your parents proud? Or is it something else? If you don't answer this question, you will fail. Because if you're chasing money for the sake of status, you will never have enough. You will always compare yourself to someone richer. You will take crazy risks to catch up, and you will lose your shirt. When I restarted, I realized I wasn't chasing money. I was chasing options. I was chasing the ability to wake up on a Tuesday and decide to go for a hike. If the weather was nice, I was chasing the ability to say no to a client I didn't like. I was chasing the ability to spend time with my family without watching the clock. I call this your freedom number. It's not $1 billion. It's the amount of money you need so that work becomes a choice, not a requirement. For some, that's $500,000 in investments. For others, it's $2 million. But you need to know what you're aiming at. This is crucial for the rational mindset because it stops you from gambling. If you know your freedom number is $1 million and you have $50,000, you don't need to YOLO it into a meme stock to try and turn it into $1 million overnight. That's not investing. That's gambling. Rationality means understanding that slow, steady progress toward a goal you actually care about is infinitely more satisfying than a risky bet that could set you back to zero. Lesson 5. The boring superpower. Dollar cost averaging. So, you have a goal. You have a buffer. You have an income. Now, where does the money go? This is the part where most people get bored and tune out. And that is exactly why most people stay poor. If you want to build wealth, you have to embrace the boring. The most powerful tool in the rational investor's arsenal is time. And the mechanism to use that time is called dollar cost averaging. Let me explain it simply. You are not smarter than the market. I am not smarter than the market. We don't know if Apple stock will go up tomorrow or down. We don't know if there will be a crash next month or a boom. A rational investor accepts that they are ignorant about the short term. So, they stop trying to predict the future. Instead, they buy a small piece of the entire market, usually through a low-cost index fund that tracks the S&P 500 every single month. Regardless of what the market is doing, think of it like buying groceries. You don't refuse to buy bread this month because you think the price of wheat might go down next month. You need bread, so you buy it. If the market goes down, your monthly investment buys more shares or more pieces of the companies. If the market goes up, your monthly investment buys fewer shares. Over time, this smooths out the volatility. This is where the psychology gets interesting. When you have this mindset, you stop fearing market crashes. In fact, you start to welcome them. When I was rebuilding, the market would crash, and everyone on the news would be panicking. But I would smile, because I knew my automatic investment that week was buying assets on sale. I was buying the same companies for 20% off. A crash only hurts you if you need to sell. If you are a rational investor who is buying for the long term, for that freedom number 20 or 30 years, down the road, a crash is just a discount sale. Lesson 6. The information diet. Turning off the noise. Let's talk about the biggest enemy of the rational investor, noise. Specifically, financial news and social media. When you're starting from zero, you are vulnerable. You are looking for the secret. You are looking for the map. And the internet is full of people selling treasure maps that lead to empty holes. I remember the pressure to buy crypto when it was soaring. I remember the pressure to buy tech stocks with ridiculous valuations. Everyone on Twitter was getting rich, or so they said. The reality is, social media is a highlight reel of wins. Nobody posts their losses. A rational investor understands that FOMO, fear of missing out, is an emotional tax on your portfolio. It makes you buy high right at the peak of hype, and it makes you sell low right at the bottom of despair. So, what did I do? I turned it off. I stopped watching the 24-hour news channels. I stopped checking my portfolio every day. I decided to read books instead of tweets. I read about the history of markets. I read about the psychology of crowds. And I learned a very simple truth. The market has gone up over the long term for the last 100 years, through wars, depressions, pandemics, and crises. The only way to lose is to panic and sell when the noise gets loud. Curate your information diet like you are curating your dinner plate. If it's junk, don't consume it. If it makes you feel anxious, block it. Protect your peace, because a peaceful mind is a profitable mind. Lesson 7. Living below your means. The unsexy secret. We've talked about earning more. We've talked about investing. But there is a missing link that holds everything together. It is the least sexy, most unappealing concept in personal finance. Living below your means. In a world that screams, "You deserve this," and treat yourself, the rational investor whispers, "I deserve freedom more." When I restarted, I made a promise to myself. Every time I got a raise or earned extra money from a side gig, I wouldn't upgrade my lifestyle. I kept living like I was still broke. I drove the old car. I wore the old clothes. I didn't buy the expensive coffee. That gap between what you earn and what you spend is your wealth engine. If you earn $4,000 a month and spend $4,000, you are a slave. If you earn $4,000 and spend $3,000, you are free. That $1,000 gap is buying your future. This isn't about deprivation. It's about prioritization. You are prioritizing your future self over your current self. You are saying that the feeling of financial security in 20 years is better than the feeling of a new handbag today. This is hard. It goes against every marketing message we receive. But it is the foundation upon which all fortunes are built. You cannot build wealth if you are spending every dollar that comes in. The synthesis. The rational investor mindset. So, let's tie this all together. We've talked about the balance sheet, the scavenger mode, the emergency fund, the freedom number, the boring investments, the information diet, and the spending gap. What is the common thread? It's the mindset. The rational investor mindset is simply the ability to separate your emotions from your money. It's knowing that the market doesn't care about your hopes and dreams. It's knowing that your neighbor's new car doesn't impact your life. It's knowing that a red day in the stock market is just a number on a screen, not a personal failure. It is the realization that you are not your bank account. You are the manager of your bank account. And like any good manager, you have to be calm, collected, and focused on the long-term strategy, not the daily fluctuations. The final challenge. I want to leave you with one final thought. If you are watching this and you truly are at zero or worse, in the negative, I want you to feel a sense of hope, not despair. You have been given a gift. You have been stripped of the illusion that money is easy or that it comes without effort. You are standing at the bottom of a mountain. The climb looks steep, but I promise you, the view from the top is only beautiful because of the climb. Every scar, every sacrifice, every extra shift you work, every dollar you save, it all adds up to a story of discipline, a story of rationality. Don't try to get rich quick. Try to get free slowly. Start today. Write that list. Turn off the noise. Buy the index fund and trust the process. If this video resonated with you, if you feel a little bit lighter, knowing that the path is actually quite simple, even if it's not easy, then do me a favor. Show the algorithm that we value substance over hype. Hit that like button. It tells YouTube that this kind of thinking matters. And if you want to walk this path together, if you want to dive deeper into how to structure that freedom number or how to pick the right index funds, subscribe to the channel. We release new videos every week designed to make you a more rational, more resilient investor. The market will be open tomorrow. The world will keep spinning. The only question is, will you be ready? I'll see you in the next one. Thank you so much for being a part of my channel.